now, welcome to the Real Estate Rundown. I'm Dustin DeHart with Keller Home Loans, and
I'm Nick Lehman with KW Las Vegas.
there you go. Good to see you, my friend.
Yeah, good to see you too. I like the fumble in there. It was
have
awesome.
stats lined up for you for hockey. Speaking of hockey, not so
Man,
great
what
night
was that?
for the Golden Knights.
Did you watch that?
I watched a little after like 2-0.
Okay.
I was like, I'm out.
I was
Yeah.
watching it on the live feed update. But
Yeah.
it ended like 5-1, I think,
Yeah.
and we were
Boy.
outshot like 2 or 3-1 or something crazy.
Yeah, that's certainly not the way you want to get things going. It's
No.
not, I wouldn't hit the panic button yet. However, 5-1 at home, that's, that was an ass beating.
Yeah,
for
it
lack
was.
of better
It was a
words.
humbling experience, and hopefully they'll bounce back game 2. Right?
Mark
We definitely-
Stone came back. I don't know, maybe that jived with
maybe that, the chemistry was slightly off.
Let's get him off the team. Thanks, Mark, but bench your ass for a little while.
You stoned us.
What would be a bigger disappointment? Last year where we didn't make the playoffs, or getting bounced out of the first round this year when we won the Western Conference and the Pacific Division?
Oh, I think this year would definitely
too.
have to be.
I agree.
I mean, when you miss it, you miss it. It was
Yeah.
like, hey, you
Yeah.
weren't good consistently over time.
They had a
Here,
lot
the
of injuries.
opposite.
Yeah,
You
know.
were good
Yeah.
consistently the whole season.
Yeah.
And now you would get bounced round 1.
And I don't think most expected us to win the cup. We're not getting a lot of respect, even though we did win the.
It's true.
Western
I have some
Conference.
odds too that I'll share with you where we are. We're kind of in the middle. We're not definitely being respected as much.
We need to win next game. What
for
is that,
sure.
Tomorrow?
Well, what do they say? The series doesn't start till you
Yeah, until you drop the
Lose.
puck and lose 5-1.
lose at home. So the series
It
just
certainly
started
right now. Boy, geez. Speaking of starting, boy, I swear the market's starting to heat up. It's
Man,
crazy.
it is. It really is. Like
know?
we talked about this last time, just how the pace or the green light just went go, turned on, and it's holding true over the last
know.
couple of weeks. Like
Boy, we've been just balls to the wall. Even on the weekends, it's like,
I showed property on the weekend. I worked this weekend.
Oh, wow.
I know that's.
Oh, my God. Bring them.
I showed houses on Saturday.
That's the wrong one. There we go.
Showed
There we
houses
go.
on Saturday and Sunday,
Yeah.
which is not.
That's what real estate agents do, I thought.
Well, I mean, we try to make it on Monday through
Yeah,
Friday. but-
I mean, I was even Sunday. I had 2 good apps come
Nice.
in, and I got more pre-approval letters than I wanted to do with. I just need some
Just
contracts to
need
come
some
in.
some success rate on the
I know,
acceptance.
it's so weird. Like everything is so tough anymore.
It's pretty tough.
Even when last week was good. We got like 6 contracts, and
Oh, wow.
I'll take that all day
Yeah.
long. And I'm figuring, okay, well, I'll take 3 this week, and we're laying. Well, we had 1 over the weekend, so I'm not a quite goose egg yet, but I still got 2.5 days. I'm remaining optimistic.
I want to ask, I mean, this is completely off the cuff here, but what is you seeing on the cancellation rate? Like, as far as once they get into contract, not because of anything to do with a loan, just a buyer.
Not much anymore.
You're not? Okay.
Yeah, no.
Okay,
And
that's good.
Boy, when what hit the fan, I was seeing that all day long.
Yeah.
And it was, just weird cancellations,
Just random.
Yeah. Like, oh yeah, my mom's not feeling well.
Yeah, like the
know,
dishwasher didn't work, so I'm canceling.
I think I have breast cancer, and it was a guy, and I'm like,
Oh,
no,
that's a
just joking.
thing.
No,
You
it's-
can have
yeah.
that. I seen
Oh,
that
really?
on the show. Yeah,
Okay.
one of the shows. I don't know.
Oh, there we go. That was my.
We had a contract come in. It was a house that had been on the market for a little bit, and the green light go has happened, and we ended up starting to get some showings. We got into contract, and right after the home inspection, the
head
agent.
fake, huh?
The agent sends an email, hey, my buyer was going to request $25,000 in repairs. I talked him down to 10, but the inspection report only said that the trash compactor and dishwasher didn't work.
Oh yeah.
So
that
somehow
sounds like 2015.
that warrants.
Wow.
So we challenged. They were like, "Oh, we're going to cancel," and we were like, "Okay, go ahead. We'll put it back on the market." And then they didn't cancel. So it was this interesting,
It was like a dance. Maybe they listened to that one show where, with OfferPad, and they're like, drop the price $20,000. Like, dude, that doesn't work.
Yeah, it was like a all in. Like we called, and so I don't know. We're getting to an appraisal
you're
tomorrow.
moving forward. Okay.
Well, appraisal's tomorrow.
So far, so good.
So far, so good.
I had
But
an appraisal come in low yesterday. It was it wasn't egregious, but $6,000.
Okay.
Looking at the comps, it seemed pretty hard to poke holes in it.
Yeah.
You know.
What price point?
400.
Okay.
So
So
yeah, it was like
a little over
405 sales
1%.
price, came at 399 or something like that.
That's
like,
not-
come
yeah.
on, bro. Can't we round up?
Yeah,
1,000?
I mean-
I've had a couple appraisals come in like literally $1,000 low. I'm like,
That's
come
that's
on, bro.
ridiculous.
Bro, you
yeah,
kidding me?
like it's a
Yeah.
brand new
like lender credit. Here you go.
ice
Let's just
maker.
get this thing done.
Yeah, that's
You know?
insane. Like
Exactly.
that's a little rough.
You know, I know we have some clients out shopping.
We do.
We have
Yeah.
one that's at a higher price point. Great couple. It's a doctor, right?
Yeah.
Physician.
Yeah.
And the wife, not on the loan, but let's face it, she's calling the shots.
100%.
right?
That's typically as all of us that are married, most of us. This
Sure,
is
absolutely.
our situation. For sure.
Where's the TV go? And honey, you figure out the rest, right? You know, and he has plenty of assets, but most of them are tied up in like a retirement vehicle.
Sure.
So he didn't really want to use them.
Sure.
You know, I think he's selling a house back east, right?
I think it closed.
Closed?
Yeah,
Yeah.
it closed Thursday.
You know, was hoping for a lot bigger sale, but only got about $1.50 out of that. I think
Yeah,
he took a little haircut.
He took
on
a
that.
hit. He took a hit.
Yeah, so we started at like, you know, $1 million loan amount, which
Right.
is jumbo, right?
Yep.
And we have a good 10% down product to that loan amount. And then, like every time I talk to you, that thinks his wife keeps creeping that up a little more, right?
We're currently in like the 1.8 range.
1.8, yeah.
So we've
It's got
gone
a
from
little tad high. Yeah, and he's good. He's out of underwriting, which is good because on jumbo loans,
Yeah.
you don't want to leave anything up for error there because there are different underwriting guidelines with
Sure.
each investor. So, I mean, he's easy as loan. You probably do his loan, to be honest with
Oh,
you.
wow.
So
Is that a
you know,
compliment
maybe I
or
need to
not
just
quite a
we'll
compliment?
switch and I'll go find them in the house. But I was thinking like, so they're in that like where is nowadays luxury market? Is it $1 million? Is that what it is? Because I've seen some houses at $1 million, and I wouldn't say that's a luxury.
I
right?
agree. Yeah, I would definitely say a while back, $1 million,
sure.
million and a half was considered luxury or high end.
Okay.
I think today you have to, there's kind of like a tier.
Yeah.
So I would say to call something high end or luxury, you're probably 1.5 to 3.
Okay.
And then kind of like our alcohol now, we have like ultra premium.
Right.
Okay. Like we have
High
ultra
octane,
premium
yeah.
tequila.
Yeah.
Your ultra premium or your super
Your
high end
18-year
luxury.
aged, yeah.
Yeah, some
barrel,
Pappy
yeah.
or something.
Yeah.
You're probably $3 million plus.
3 million plus,
is
yeah.
your super high
That
end.
seems about right.
Yeah. Does it?
it's about- yeah. Absolutely. I'm
Way to
reading my notes.
fact check me.
No, it actually, but I think people still say like $1 million plus is luxury, but
Sure.
like, I mean,
tiered.
in realistic terms, like that's a 1998 house in Green
Yeah,
Valley Ranch right now,
for sure.
right? So
It's like
know?
like a Porsche, right? You can get like a
Yeah.
Porsche S, or
Yeah,
you can get
there's
like a
difference-
GTS.
right, or you
very
can get the
different
turbo,
car.
and then there's Turbo S.
Yeah,
right?
very different.
Believe
So
me,
I would
know.
say it's still a
Right.
high end house, 1.5 to 3, but your 3 pluses are your GTSs.
Yeah, and by the way, what was your largest sale you've ever did?
4.2.
4.2. Wow, listing or buy?
It was a buy.
Buy. Wow.
I haven't had the opportunity
When was that?
to it just closed. It was,
Oh,
was
good
within the last
Last
year.
year? Okay,
Yeah.
cool.
Yeah, Southern Highlands, new build, GLH.
Easy close, or was it a pain in the
It was interesting because the way they package it, you buy the land first, then you
it was a new
get
build.
as a
Okay.
new build. It's not even done yet.
Oh,
yeah.
okay.
But we got paid already.
There you go. I love that.
You get paid on draw
Damn real
one.
estate agents. I
We
swear.
already get paid. The house isn't
There
done.
you go.
No, the way the builder did it is on construction draw one. They
Okay.
paid out agent.
Ah, okay.
So we got paid on the land right when the land closed, and then construction draw one.
There you go. So is it like a listing? Like is the average days on market a lot longer for 2 million up versus?
Yeah,
you
no,
know?
that's a really good question. Good point. Yeah, so it is.
Yeah.
So our average days on market for anything, let's just say totality, okay, is about 51 right now.
Right.
Okay, now when you go above 3 million, average days on market is 74.
Okay.
So
Really?
25%,
That seems really
30%.
low, right,
It's
yeah.
still
Yeah.
quick.
Yeah.
Here was what was interesting though. I also looked up 3 million plus listing price, the average days on market of the actives.
Okay.
So the average of the solds was 74.
Right.
So some sold in a week, some sold in...
Right.
The average days of the current actives, 129.
Okay.
So that basically means everything that's still listed for sale right
Right.
now beyond 74 is so astronomically overpriced.
I was going to say that
it's
it's probably
just sitting,
overpriced, right?
just
Yeah,
super overpriced.
But you own a $3 million home, you think your home's probably worth $5 million,
100%.
right?
Yeah. I mean,
get it,
which is
right.
what we're doing
Yeah.
now. I mean, our client now, we showed a 1.77 house. We
went a
offered
little low.
We offered 1.4.
Okay. All right.
So
Well,
let's do that same ratio to
Yeah.
3 million. That'd be offering
Yeah.
like 2 million on a 3 million.
Yeah, and our clients, they're not into like the really modern design either.
No,
right?
you know,
And
yeah,
that probably eliminates a
It
lot
does.
of properties.
It does. No, the criteria that I've been given is 5,000 plus square foot swimming pool and not modern.
Okay.
So I'm going
Right.
to, that eliminates,
So
some
what
of
is
the
that
newer.
called? Not modern. Is that contemporary? I
Yeah,
guess?
yeah.
Okay.
Contemporary is a good
See,
word. Yeah,
I
that
know my
sounds.
crap.
Yeah, that's good. So Spanish Trails is where we, it's still a great location, but you don't have the super. She thinks that the modern homes look like office buildings.
Yeah.
She's like, I don't want to buy an office building.
I
I don't disagree with
Yeah,
her, but
yeah.
that's just what's popular now. And I kind of like the clean, sleek,
Me too. Yeah.
rectangles, squares. But she wants, columns and grand and like wraparound staircases and
Yeah.
Spanish Trails all day for you.
What, like, amenities wise, what does a buyer expect in that $2 million price range? I mean,
Yeah.
a wet bar.
You should expect a wet bar. It's pretty much going to be, so all homes are kind of the same footprint.
Yeah, right.
Once you get to like
Bedrooms,
3,500 square foot or 4,000 square foot, like
big ass kitchen.
there's
right?
a kitchen,
Yeah.
there's a living room, there's a sitting area, there's some flex rooms. You're going to have probably 3 to 4 bedrooms, maybe some will have 5. But what changes when you get to the luxury space is the size of those rooms can change. Obviously, if you get to 6,000 square foot, but it's really the finishes.
Yeah. No, okay. That
So,
makes sense, yeah.
a flooring on, let's say, a track home at 800,000 that may be 4,000 square foot, you're getting a tile
right.
or a laminate, wood-like
Gotcha.
vinyl
Right.
where when we go to the 3 million, maybe you're getting travertine.
Yes.
You're getting some imported tile that literally was brought from another country.
Yeah.
Or
And buying a resale at that price range, you're probably hoping that you don't have to go in and redo the whole property.
for sure.
Right?
Yeah.
So,
And you're having I would also say in the luxury space, it's big on your feature walls or your feature moments. So
Yeah.
let's say you have this living room with this amazing fireplace. Well, a fireplace can be a focal point, right, in a lot of people's homes. Well, in a luxury space, it'll be this book matched, stone that, book matched is.
No, but
Okay, so like the veining,
sound smart.
like the
Yeah.
veining
Oh, I
in
gotcha,
granite,
yeah,
they'll
yeah.
literally find another piece that has the same. So if it has like a V vein, they'll find another
Oh,
one.
wow. Yeah.
And it's called book matching, like
Wow.
opening a book. And so you won't have that on like $1 million house, but if you go into a 3 million plus house,
see that, yeah.
book matching all day.
Interesting.
And
Yeah.
that costs more because you have to source how many material to get one
Gotcha.
that the veins fit.
They're crazy.
Then fabricate it. It's pretty wild.
That is wild.
I should bring in some pictures of some like book match examples.
Well, sounds like
Bathrooms.
a topic next week.
Book matching.
Yeah.
Book matching.
I love it.
That's
On
fun,
the
but-
lower end of the things,
Yeah.
I actually had a client, it was a contract that came in over the weekend. It was one of those that it was a special one, right? Because he was told no by a couple lenders, right? And
Love that when
those are the ones that,
yeah.
we really enjoy because, he is now buying a house. He's in
Yeah,
contract.
that's awesome.
It was a referral from a real estate agent that we recently met, and he gave us a tough one right off the bat.
Right. Yeah. Prove
But,
yourself.
Yeah, and lower credit score and needed down payment assistance. Didn't get an approved eligible, right, through the automated underwriting system.
Yeah.
It was what, you usually need. However, he had some good compensating factors, and you can do what's called a manual underwrite, where you're telling an underwriter, I know the computer program told you no, but this is why you should say yes. And we packaged it up really good, and we got the pre-approval
Nice.
up front. And literally, like a week later, dude's in contract, happy as could be.
Oh, that's dude.
Yeah,
You're
so
like
that was
you need a cape. You're like a superhero.
Yes, I need a There we go. Yes, thank you,
Perfect,
Nick.
perfect.
All
Yeah.
right, well, that was a quick 15 minutes.
It was, man. We got to go straight to the rundown.
For the rundown. Let's do it. All right.
What do we got today on our topics?
Well,
we got.
It's not a show unless we talk about rates.
I mean,
right?
we have to. Numbers.
So-
Dustin, let's get it started. What's going on with rates?
Well, rates have been a roller coaster, and if we have there it is. So that's what's going on with interest rates. And that's what I really want to show this because I know that literally makes
what does that mean?
Looks like vomit right there, but that's mortgage-backed securities, right? That's what rates.
I thought
are.
it was Dr. Mario. Like
Right,
it looked. All right.
So if we look at that now, what you see is all the way to the left. That was see where it was going up, and it just kind of tanked down.
Okay.
When it goes down means rates are actually going up.
Okay.
Right? Because the price for rates are now be more expensive, right?
So like an inverse
Basis
relationship.
points, exactly.
Oh, wow.
Right. So remember when everything was good? We're about to, we actually hit the fives, and then we had that crazy jobs report, right? See what that did? All the way down.
Yeah.
Then we started climbing back up, and everything was looking good. We've had some ups and downs. But last week, we had 2 good inflation reports, better than expected.
Nice.
It was good for rates. And then Friday, for whatever reason, they just kind of tanked on us. And then that happened Monday, and then yesterday, and then today wasn't a very good day. Now we've broken a level of support, and there's a lot more room for the downside, which means the rate, look, you can still get the same rate, but let's say it cost 1 point before. Now it may cost 2 points, right?
Okay.
So that just kind of shows you, and then one more slide, Rick. If you ever want to see what's going on with interest rates, you look at the 10-year Treasury note, right? Some loan offers, that doesn't follow that. Well, if you look since 1970,
that's
I don't know if it can
pretty-
follow it any more than that, right? So
I thought it was a shadow.
Exactly, right? So the green line's Freddie Mac's interest rates, and the
gold is the
line,
Treasury.
the gold is green is for the money, gold is for the honey. That's the 10-year T note, and it doesn't get much clearer cut than that. That's what it follows. So you can always see what's going on in interest rates by looking at that 10-year note. All
Nice.
right. March numbers.
Yeah,
I thought it said madness.
Gelvar or LVR put out their numbers,
All right,
and
get
so
to it.
let's go over it. So 2361 sold. Look at the new side. 2565, 4196 available. Median price stayed at 425. What does all this mean? It means we were flat again on median price. That's your big takeaway. Our units sold did increase from last month. Those percentages down are year over. We're not going to focus too much on that. The new listings did increase, but what's interesting is our units available. So essentially, this just speaks to what we have said. We hit the bottom.
Right.
We're now 90 plus days of no price change on the median sale price, and the inventory has gone down.
Yeah, for quite a few weeks now.
It's like
a couple months.
24
Yeah.
straight or 6 months straight of inventory going down. So it is just, I can't say it any more clearer than we have been saying it. We are at the bottom. We've been at the bottom. Everybody wants to know, well, when's the bottom? And here locally, I could say, based just straight on math and data in Las Vegas, Henderson area, we are at the bottom.
Yeah.
It is time. If you were waiting for it, it's here. And it's starting to go in the other direction as
And it's
you're
good to see
asked.
sales go up.
Yeah.
That's what we needed, and then that always happens, from February to March, anyways. And now here we come.
Yeah.
Right? Summer months.
The spring buying season. It'll be interesting to see if the inventory continues to go down. I kind of follow this daily. So that LVR report's a couple weeks old now.
Yeah.
And daily it's still trending down.
Yeah.
So
I don't see anything changing to get inventory up. So boy.
Well, yeah, if you have 2.875% interest rate, why are you selling?
Exactly.
Unless you have to.
Unless you have to.
So,
Life events.
For sure.
Unless you-
FHA. Sorry.
Well, that's only you can get into an FHA 40-year loan.
You can stay forever.
Did you see this all over Facebook? I'm getting calls from people like, FHA's got a 40-year loan now. Well, they do.
But
it's not for purchases.
Giant but.
Yeah, it's not for purchases or refinances. It's for a loan modification. right? So you already have an FHA loan.
Okay.
You actually need to have missed the payment, right?
How many do you got to miss? Is there a definition?
I don't know. At least one, I think, right?
And this is not something you can help somebody with, right?
No.
They work directly with the servicer.
Exactly. You'd call up your servicer, say, Mr. Servicer, I am having trouble making my payments, as you can see, because I haven't made one. Yeah. I've missed a couple.
Therefore, I would like to
stretch my loan out even more, because that makes a lot of sense, right? So I don't know. I have a lot of feelings about this.
It's a little.
I don't really see this helping too many people.
Do you think we could find somebody that we could test this on, just to attempt to do it, or just to see what it
wreck
would
your credit? Well, you have to show a financial hardship too. So remember the old loan modifications? They sound so easy, but they aren't so easy, right?
Have you ever heard of a successful one personally?
A handful.
Yeah.
Okay. But. And again, this is more with the social media stuff. All these forbearances are coming. Look, HUD's, their job is to help you know what I mean?
Sure.
And I get it. So, as a 40-year mortgage, I think, the average, it's going to save you about $180 a month, probably less than that. So, I don't know, does that really get you out of financial hardship?
No.
And now you're paying way more interest and stretching your loan out. I mean, you could refinance back to a shorter term, but who's going to do that?
And why not? If you're going to create the program, why is it only created to go into be in default first? If you're going to throw out a product, throw it out.
It's rewarding.
That's how I felt. You're rewarding the people not paying. Bottom. So we're going to continue on the trend. This is look at your language right here. This is since October. I thought this slide to be super helpful of your ups and downs. It's a little bit more of a zoomed in slide of what you were showing, but our peak interest rates were pretty much October.
Yeah.
Okay.
Yeah.
We went down. We went up, we went down, we went up. But if you look at the overall trend, the point of the slide is to show you that it's down.
Right.
Okay, so you take that in combination with the amount of homes that are for sale, and then there's this third piece to proving that we are at the bottom, which is affordability. So if we go to the next slide, look at that.
Yeah.
That is your wages.
Yep.
No, so that's the wages report.
I'm glad you put that up because the people don't talk about that.
They don't. So what helps housing, or how is housing impacted? And so you have to take pricing, okay, which we're flat. We've talked about this. You have to take rate. So rate since October is down. We have trended down. And then you have to take wages. So here is the wages. Look at October. I mean, we're making almost, 70 cents more, and it doesn't sound like a lot, but the point is as it goes up, it makes the affordability greater for a buyer, and the interest rates peaking down also makes the affordability greater for the buyer.
Yep.
And if pricing has bottomed out and flatlined, the affordability is greater for the buyer, which is what I think we're seeing.
I know, yeah, and it's going to be an interesting summer.
The summer is going to be.
Gosh. It's we finally get some house, you know what I mean, and we can get offers accepted, and it feels like we're back into what.
Yeah, well, we just the affordability piece wasn't there when the inventory was, and that would have been cool opportunity for buyers, and some people took advantage of it.
Sure.
Right now, it's definitely more balanced than it was.
Yes, it is. All right.
Rate
quotes. Well, I don't have a slide for this.
Oh, you're just going to talk to me.
We're on the rate bandwagon here. So, look, I guess this is why this got brought up. Is yesterday I had a client I talked to a few weeks ago, right? And it was a veteran. He was referred to me by one of my agents, and he kept telling me, I'm using something Veterans United or something. I forgot what they were called. I'm like, fair enough. I mean,
Veterans United
sound like a very
Kalamazoo,
reputable
Missouri.
company.
They're from Missouri.
Yeah. And, look, we can pre-approve you, or they can, when you get into contract, let me know. And let's see who the best man is, right? Yep. Well, he didn't call me.
What? You have a cape.
He kept thinking, no way that somebody named Keller is going to be veterans, right? We were by a 0.5 point interest rate, Wow. I mean, and that's not always the case. And believe me, if I'm losing, I'm going to be the one to tell you right away, So people really get fixated on, I've got to use this loan officer who did so much work for me. Well, I appreciate that. But at the end of the day, if you're getting a better deal from somebody else,
math is math.
I mean, it is what it is, you know?
Math is math.
Or at least utilize someone to make that other LO sharpen their pencil a little bit. And I've done that quite a few times. So, you know, the rubber meets the road, by the way, when you can lock in an interest rate, right? Because I'll lose pre-approval letters because they're like, oh, I'm getting a better rate from somebody that just quoted me 2 days ago. I'm like, well, did he lock you in?
Yeah, you don't even have a house yet.
I'm like, all right, well, call me when we're ready to lock in.
Right.
Let's see who we're,
there you go.
know. So, but, you know, they forget to call me sometimes.
Yeah.
So my point is, if you're a consumer, shop around, see who's giving you the best deal, and go with that and who you really trust.
Yeah, no, that's a fair point. At least one other, for sure. At least one. Yeah. All right, playoffs
don't
are
go
back.
10, and then
then they're pulling the soft. Yeah, in the polls. So we talked about the Golden Knights. It was a disappointing game one. You know what I wanted to do. We talked about football when football was going on. So I pulled the stats of who's favored,
right,
and you know what your prediction will be for the Stanley Cup. Okay. So, are you aware of all the teams that are in? How avid of a hockey fan?
Not that avid. I know the Boston Bruins are probably going to be.
They're the favorite because they won the President's Cup.
I think they had the best season ever. So
it was up there. Yeah, I want to say it was one of the top.
If you win the President's Cup, well, it's kind of a curse, right?
Right. You don't win the Stanley Cup. Right. We fact-checked this before. Not since 1985-86 season has the President's Cup winner, which is what
sounds like a trend that needs to be broken here. So
it's fair. It could be happening. But the Knights are kind of right in the middle. Okay, so they're the 1, 2, 3, 4, 5, 6.
Yeah.
As far as here's some stats there. I want you to make a selection. You know, for the
Stanley Cup,
for the Stanley Cup, for the listeners that are listening.
I will go with the Bruins, and I will go with the Oilers. I think Edmonton's the best team.
I did too. I like the Oilers as well.
With the Bruins winning. So.
Now, Edmonton, are they on the West Coast?
They are.
Okay, I see. I didn't even know that.
Yeah.
That's how much hockey I watch.
Yeah, because they're so West Coast.
They are. And I don't.
Do you know where Edmonton's at? Because I don't. I know it's in Canada.
I
barely know where Canada's at.
It's
so sorry.
Up there.
Yeah.
It's up. And then I think the Lightning are in the West, even though they're in Florida.
They are, right? No, they're in the East. They're in the East.
Okay, well, so then that would be my East team.
Okay, so you're going Lightning and Oilers? Okay.
I would go Lightning and Oilers. I think the trend will stay true.
Yeah.
With the Bruins not being able to.
Yeah, the damn Lightning win again. I'm done with hockey.
They're electric.
Hopefully the Knights, get their what together, and we need to win.
It'd be cool to see them get there for sure.
Yeah. Their defense is kind of what's carried them this season. Well, I think they left their defense somewhere.
They were sleeping
yesterday. So
we'll see. Pollen in the air.
I have
allergies.
Become a big hockey fan like everybody else,
for sure,
right? Because of the Knights, and it's amazing to see them do so well. So early, you know what I mean? Like that's almost
it was stacked. Yeah, it was stacked.
And
for
Seattle, I think they beat the Avalanche last night.
They did, and they made the playoffs second season. I think.
Apparently,
so that's cool.
These NHL teams do pretty well from the beginning.
They do. So, I think it's stacked the way that I had read, the way that they're doing the expansion teams, but they're set up to do well in the beginning, which honestly they should. That's how it should be, so that they can generate revenue. But
absolutely. Well,
final thoughts, man. What anything that stood out to you today?
Boy, it's just been a roller coaster, rates and everything else, and just it's just not easy getting an offer accepted anymore. I mean, we're getting outbid and. People that need seller concessions, they're just going to get poo-pooed a lot. And, obviously, there are offers getting made with seller concessions, but it's a complete paradigm shift from 3 months ago.
For sure. And the ones that I'm noticing that are getting seller concessions, like I'm holding my breath for the appraisal.
Yeah.
Because if that's gonna, if that doesn't come in, are they gonna cut now the concessions that the buyer needs?
Yeah.
It'll be the next couple months is going to be interesting. I hope that if your May rate prediction holds true with the current inventory level, it's going to be.
It's
BANANAS.
It's going to be very interesting. So, and I am pretty sure it's going to hold true. So. We're a little rocky road right now. Again, rates don't go up and down
up.
in a straight line. Just follow the 10-year treasury.
Oh, I mean,
now,
that thing was amazing. Yeah.
Boom, you're good to go. But I think we kind of held steady today. Some more inflation. Look, bad news is usually good news for rates, except inflation. So keep that in mind. All right, my friend, we're out of here. How do they get a hold of you?
Best way to get a hold of me, that's my direct cell, 702-289-5200. Call, text me anytime. Dustin, how about you?
Yeah, just my beeper. Remember the beepers?
Yeah.
What was it?
I am the owner. I am the king of beepers.
702-217-3009. Thank you very much, you guys. We will see you soon.